Hi, I'm Adam,
This is Kevin.
and we are Tech Guys Who Invest. This is the place for business people and investors to learn all about investing. We offer a fresh perspective on what it's like to have a day job while investing, and we share lessons learned on our investing journey. Our vision is to educate and entertain you while adding tons of value to your daily commute. Welcome to our show.
We are back with another episode of the Tech Guys Who Invest podcast, where each week we teach you how to invest wisely and safely. As an investor, it's important to know what's happening in the news. I don't choose to follow it religiously because it's so negative, but it's important to know what is happening. And as of March 20th, 2020, when we're releasing this episode, you're going to see a lot of information about the coronavirus epidemic that's spreading internationally. You're going to see talks about the dip in the stock market and what people should do, what's happening. There's going to be tons of panic that's going to spread on the internet as well as in person. And we give our thoughts as to how we believe it should be best handled. So if you have any thoughts that you'd want to share with us, reach out, techguyswhoinvest@gmail.com, comment on this post, send us an email, shoot us a DM. We'd love to hear your thoughts. Speaking of crashes, Adam and I know that what we're talking about is really just conjecture. He and I are not smart enough to be able to predict when something is going to happen. However, wouldn't it be nice if you had investor insights or 5 tips that would help you invest wisely and safely? Well, that's what we did. We consolidated decades of experience from our previous guests. We asked them a series of questions that we thought you, our listeners, and other investors would want to know that we think will help you maximize your returns, but also while reducing your risk. So if you want your free copy, go to ebook.tgwipodcast.com. Again, that's ebook.tgwipodcast.com. Yeah, I was at Costco earlier today, and it was nuts. It was a madhouse. And I was asking, why is it so busy? Is it normally this busy during snowbird season? Because I don't remember it being that bad the last couple of years that I've lived here. And said, no, I think it's because of the coronavirus that people are freaking out and stocking up in preparation. I was like, what? It blows my mind.
It is crazy how people just panic and they start doing things like that.
Yeah.
Yeah, and that just sets other people off too.
Yeah, when I was prepping for the last hurricane warning that we had, I went in there, I was like, I wasn't really panicking. And then I see everybody else panicking, getting water. I was like, oh my God, I guess I am panicking.
Maybe I should be taking this more seriously.
But that's also a testament to investing, right? Well, when the stock market crashes and there was a big dip, people are going to start panicking. When your neighbor starts panicking or your coworker starts panicking, it's hard not to panic because you've never really trained that mental fortitude to say, okay, I know this is when I should buy more. This is when I should be greedy or just wait it out, right? Like those are things that you hear about, but it's not like you ever try to practice it. And how can you practice how to invest during a dip? It's hard. So it's just like, how do you build that mindset?
Yeah, you just have to experience it and go through it, right?
Yeah.
Just be aware. And when it's happening, that awareness will help you understand how you're feeling and then help you be intentional about reacting.
That's a good point. Being intentional about the reaction, because it's almost as if you reacted to every negative news article, you would be a worrywart or you would be miserable because the news is in the media is designed to showcase the most negative stuff first because that's what our brain is attracted to. It's a business, right? And then B, if you reacted to all of those, you'd be exhausted.
Yeah, no kidding. And look at the wild market swing. I mean, it is crazy what the market has done. It's dropped like a rock.
I heard
over
that.
1,000 points.
I heard that through the grapevine and did some quick research, and I didn't really think about it. Maybe because I'm not invested in the stock market, but that's not to say if you're not invested, you should pay attention to what's happening. It's just my money, my 401k money that was there is invested in notes. So it was almost like, okay, well, the market could crash and I still have these notes that I know are secured and I'm okay.
Yeah, that's great. I know I do have money in there still. I haven't moved it all out of there because what I was planning to do is just not continue contributing to it, start to divert all future funds into real estate investment, which I've been doing for a couple years now. But I still have money there.
Sure.
So it's, when it takes these giant dives, I'm just like, oh, oh.
Yeah, I
And
didn't,
I,
in 2008, I was 18, 19, 18. I, I didn't have money in the stock market, right? I was just trying to get to class in college, which I didn't do very much of, admittedly, skipped class. But besides the point, I didn't experience any of that. So I was in my own little bubble. So it's interesting to see how this is going to transpire. Maybe this is the
yeah,
beginning. Maybe this is just a small little dip. I don't know.
yeah, nobody does. That's what's crazy about it.
Yeah, that's the scariest thing. So, like, how do you prepare? How do you even act in these types of moments? And I think that if you are invested, some the smarter people than I'm just reiterating this because I'm not an expert. Uh, when there's blood in the streets, that's when you get greedy. That's when it starts time to start buying. When it seems like, oh, I should sell all of this. You should buy more, kind of thing.
Yeah. And I think you have to be educated on what it is. Like even though I know that and I realize, hey, this would be a fantastic time to buy, maybe even do some shorting when you think it's going to go back up. But I'm not educated enough in those investments to even think about doing that. I would never think about doing it, right?
Yeah. And if anything, I think this could be a good wake up call to say, okay, what else can I put my money into? And let's say that you don't want to be fully vested in real estate. That's fine. I'm not saying you need to. Your investor identity is your investor identity. If you wanted to diversify and have some here and some there, I think that is, generally speaking, from what I've read, the safest way to invest is diversification. If anything, this is a wake up call for that, to say, all right, I think I'm too heavy in this area. Maybe I should spread it out somewhere else.
One thing it made me think of is within the focus I have, multifamily, how could it affect that?
That's a good idea.
And it could, right? I mean, it could affect anything at some point, right? Like everything, the economy, especially nowadays, the world economy is linked to a point where ripple effects could be felt through many, many other seemingly unrelated areas. But if this went really bad for a long extended time, for years, and people lost their jobs and they didn't have a way to bring money in, then they couldn't afford to pay rent, and then that's when it would start affecting real estate investing. People can't afford to pay rent, and um, you just think about that because when times are good, it's really hard to think about that.
Oh,
I know
yeah.
we stress test all of our deals and put them through those models. Um, if we didn't, I'd be terrified.
Absolutely, you should be, right? And that's why, if that's what a lot of people say, the B and C class is a great investment, because if you're in the A class and the economy starts dipping, generally speaking, it's that those A class people are going to move to a B class. They're going to try and find a way to save some money. If they lose their jobs, they can no longer afford the luxury of an A class, so they'll move to a low class, to a B, to a C, or whatever. And
Mm-hmm.
then the Bs may go to a C's. But if you're in that area, even in the downturn, there is the possibility that people are still going to come to your apartment, because those who are higher up with their cost of living may want to just decrease. So it's a good investment for sure.
Yeah, yeah. That is why I like C and B class apartments.
And then
Right there.
statistically speaking, if you have 59 units, if you have two people that have to leave because they can no longer afford it, you still have those 57.
Right. Yeah. Exactly.
Yeah, I mean, I think you hit on something really important, is to get educated. That's another thing. It's another wake up call. If you're just kind of lazily putting your money away and it's been doing well, that's great. But it's also, maybe you should look a little bit more into how you want to invest your money and what that really means to you. Don't be unintentional or an accidental investor, if you will. It's important to really understand what you are putting your money into. It's it could be your retirement. I mean, take control of it.
Yeah, I think, one thing that I started to think about when I saw the giant slides down this week are how much of a loss people's portfolio takes and how hard it is to make that back up. I even saw a few articles that say, well, a lot of times when this happens, the markets bounce back pretty quickly and things. But, if you take a loss, you have to earn more than the loss dropped to make it back up. Like,
Yeah.
I mean, if it falls, like you know, if you have I don't know what, $1,000 worth and it falls, 50%, then you're down to 500. But then from 500, um, back up to 1,000, you have to make more than 100% to
Get back. Yeah.
gain. Yeah. Um, so that means these drastic losses are likely to heavily impact people's portfolios, and it's going to be tough to make that back over
And then
time.
another thing, I know that you can buy things on margin or whatever, but I don't know if the average investor is generally doing that. Like, I don't know if I can do that in my 401k. I've never explored that option. But that's another thing with real estate. You could have a property, let's say, that you have only a portion of your savings in. And that's the beauty of it, is you can use leverage. You are not using all of your liquid to buy an asset. It's not all cash, it's just a portion of that. And if you lost that property for whatever reason, or you had to sell, you're only losing a portion of your nest egg, as opposed to, like you mentioned, if you're fully vested in the stock market, if you need more shares, you'd have to have more liquid to do that. You couldn't really use leverage, to my knowledge.
Yeah. I know if this were to continue and the multifamily space were to take a hit, my team and I are ready to move in and start buying things at discount.
Yeah, the good thing about being a non-performing note investor is that when the market does take a dip, like Dave Van Horn said, our last guest, that's when you want to buy. That's when you're going to get those deals at uh, cents on the dollar, because
Right.
the market's at its lowest. And if you buy it that low, you're just kind of, it's going to go up, right? And I think that's one of the reasons why. Or you're secured by that real estate. You get a property super cheap, and people always need a place to live. And affordable housing is definitely going to be an even greater issue if people start losing jobs. So
Yeah, these epidemics, it's just profound how much they affect the economy, markets, people's investments and livelihood, and they just spread so quickly.
yeah, and it's crazy how easy it is to fall into that panic. I think
Yeah.
going back to that, having that mindset. And I think for me, it's just making sure you understand what the risks are for whatever it is you're doing. Have a plan for how you want to use your money. And if there's an exit, I think it's also important to understand what the exit is in the stock market.
Yeah, and a lot of
What's the
this just
exit?
comes back to what we've said a few times. It's about education, preparing yourself, and this could be a really good wake up call or a nudge or a
Yeah.
an event that will help people say, "Hey, if I haven't been educating myself and if I haven't been um, starting to think about what I would do in the future, this may be a good way for them to start to do that."
Yeah. So our listeners out there, if you've reacted to the dip, or if you're feeling like, oh, you should be doing something, we'd love to know your strategy. We'd love to chat with you about it. Feel free to send us an email, techguyswhoinvest@gmail.com. Reach out to us on LinkedIn, wherever. We'd be more than happy to understand what's happening, maybe even figure out how we can help each other out.
Also, as of this recording, we just released an ebook that we're really excited about. For those of you who follow us on social media, you've no doubt seen that. You can check it out, get more info on our website. You can go get the book directly at ebook.tgwipodcast.com. We'd love to see you Get that free gift and let us know what you think about it. We think it's pretty awesome.
Thanks, everybody.
That's it for this episode of Tech Guys Who Invest. This is Adam.
And this is Kevin. Thank you so much for listening to us. Don't forget to join our Facebook page where we're building a community of investors so that we can share ideas, tips, and other ways to help us get out of the rat race. If you found value in this podcast, it would mean the world to us if you could share it with your network. Lastly, we love feedback. It's how we get better. So if you wouldn't mind spending 30 seconds and leaving us an honest review on iTunes or Stitcher or whatever platform you're using, that would be super sweet. If you want to get on Adam or Kevin's calendar, go to tgwipodcast.com/contact. We want to help you invest safely, wisely, and ultimately get you out of the rat race. Thanks again.